Hi, this is Adam Newman, Managing Partner and Senior Wealth Advisor at Bernie Wealth Management. And I'm joined here today by Brenna Surette, one of our wealth advisors. And this is Byte Size Retirement, where we take common retirement planning topics and break them down into bite-sized pieces. This video is not meant to be investment or tax advice, but hopefully gives you a sound foundation to begin to plan off of. And remember, while we might be taking just a couple of minutes to explain these topics, please do not take the same amount of time to try and make these really important life decisions. So today we're going to be talking about obtaining health insurance if you're an early retiree. And before we get going, I just want to quickly define who we consider to be an early retiree, and that is someone who's retiring before age 65, which is the age in which Medicare kicks in. So you're an early retiree, you're juggling various different decisions, and we're going to walk through really three primary options that you've got at your disposal in most cases. One being coverage through your, current employer, coverage through the spouse, and then finally going through the health exchange, the healthcare.gov marketplace. So Brenda's going to kick us off and start with employer-based coverage. So Brenna, why don't we kick it off there?
Mhm. Yeah, with this decision, it's really important to weigh your options. So we always think a great step is to, get with HR and see what your employer offers in terms of employer-provided retiree coverage. This will really vary employer to employer. So it's really important to just, as step one, understand what's available to you. In some cases, employers will offer, discounted price to continue coverage. If you do want to continue your employer coverage and they aren't offering any sort of benefit in that way, you can still continue it with a route called COBRA. So COBRA will allow you to keep your current insurance, which means that you don't have to worry about changes in your coverage or your network. So you can typically expect to keep your same doctors, same pharmacies. It'll feel really familiar. And at the same time, though, COBRA is a more expensive option, and you may be required to actually pay the entire premium for coverage, up to 102% of the costs to the plan. So again, probably the most expensive option, but at the same time, the most familiar, and it can be nice and less jarring to jump around between plans. But I think a good segue from that and an important piece to that decision of if COBRA makes sense for you is around timing. Adam, I know that when working with clients, timing is an important piece. Do you want to just walk through how that sort of comes up and plays a role in this conversation?
Yeah, timing is everything. So, if you're someone who's retiring at 63 or 64 and you've got only a year or so until Medicare, then something like COBRA might make a ton of sense. It's familiar and you've got a short bridge period until Medicare. So that might help we'll weigh in the decision around, do I want to go from my employer plan to some other option and then to Medicare, instead of considering three different insurance providers within a year window, COBRA might be, a no-brainer in cases like that. But if you're someone who's retiring, at 55 and you've got 10 years till Medicare, then COBRA versus some of these other alternatives that we're about to talk about might, that might look a lot different from a decision-making standpoint. So you really need to weigh how much time do I have until Medicare? And, from a budget standpoint, what might my options, look like? So, again, just continuing to emphasize here, we should be comparing all of these things side by side. And the second one that we want to talk about today is going to be coverage through, your spouse's employer. So let's say you've considered your options with your current employer before you retire. You're aware of what COBRA might cost if that's, the route you might take, but your spouse is working full time and they have coverage. So in that instance, it's definitely smart to consider what it would cost the family to enroll you, into your spouse's plan, and what does that coverage look like? Are you happy with it? And what does that cost come to be, every month? And what does the out of pocket look like, compared to these other alternatives? So go through the motions and understanding what a spouse's plan, might look like for you and your family is another really, easy avenue to explore and explore ahead of time. And then that leads us to the third big option, Brenna, which is coverage through the healthcare marketplace. So let's close it out there.
Yeah, so to access, the healthcare marketplace, you can actually go to healthcare.gov. And an important note that you mentioned earlier, Adam, that I just want to reemphasize is even if you do have, a spousal plan or employer provided retiree coverage that sounds like a great fit for you, it's still important to still go to healthcare.gov and look through the other options just to really compare and contrast and make sure you are picking the plan that is best for you. But once you go to healthcare.gov, one of the first questions that will sort of pop up on your screen is asking for your zip code or your location. And that's because these plans are very zip code specific. So if you kind of play around with different zip codes, you'll see that the prices will vary location to location. But once you've entered in your location, your zip code, you'll be allowed to choose from a range of plans from insurers in your state, a large variety of plans from high to low deductibles, and you can really scroll through and tailor your search to find one that really fits best for you and your family. Another quick note is that these plans are also incredibly income specific, and we actually have a whole other video dedicated to diving into that topic in more detail. So be sure to check that out. We'll link it down below, but wanted to throw that quick note in where when looking through, just be mindful that they are income specific. And I guess that kind of segues into the next point, which is with this decision, be sure to include your financial advisor, whether it's just looking through the plans, comparing and contrasting, or with looking at your income or from a tax planning standpoint. It can be really valuable to just talk through it with your financial advisor. But, with that, we hope that this video is a helpful starting point and answers some high-level questions. As always, if you have any other retirement planning topics that you want us to dive into in a whole video, be sure to comment them down below and be sure to like and subscribe. Thanks for watching.